from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a tech sell-off sweeping U.S. markets. Shares of Apple, Tesla, and Amazon all sink. Plus, Zillow and Lyft reporting results. We'll have a roundup. And poking holes, attorneys for Apple go to work on Epic Games CEO Tim Sweeney. We will have the highlights of his cross-examination from day 2 in this massive antitrust trial. And neighborhoods have become crucial information hubs in the year of the pandemic, but post-vaccines, as people go back to work, what's the next chapter in keeping communities connected? That and more in an exclusive conversation with Nextdoor CEO Sarah Friar. We begin, though, with the U.S. markets selling off, sparked by inflation fears, tech getting caught up in the crosshairs, mega caps like Apple, Amazon, and Tesla all seeing shares fall. Let's get more from Bloomberg's Katie Greifeld and Kriti Gupta. Katie, what are you watching?
Well, Emily, stocks we're seeing red today, led by the tech sector, down over 2%. That dragged the S&P 500 down by 0.9%. The NASDAQ 100, though, more than doubled that drop as your big fangs fell. Comments from Treasury Secretary Janet Yellen didn't help there. She said that higher rates might be needed to prevent overheating in the economy, though she later walked that back. Now, chips also felt the crunch, with the Philly Semiconductor Index dropping for a third straight day, and that chip weakness is turning into a trend. If you look at the semi-index against transportation stocks, your railroads, your airlines, usually the two typically track each other, but they've started to break apart. Transports are at a record high and climbing, but the semis index has fallen for 3 weeks as those production constraints really start to pinch. That's taking the shine off of growth stocks, which is why you're seeing outflows from funds like Cathie Wood's ARK Innovation ETF. Kriti, this fund was on fire coming into this year, up about 150% in 2020. But daily outflows are really starting to build here as tech continues to lag. And the ETF fell another 3% today, so we could see more outflows from here, Kriti.
Well, Katie, thank you. You mentioned a lot of the macro stories. Let's just kick off the micro with some of those earnings stories. Kicking off right at the top with Lyft earnings. You actually see them reporting a loss, but shares up after hours. A lot of this just have to do with the loss wasn't as bad as analysts were expecting, so that, of course, boosting shares as well. You also had Match.com right in the middle, your revenue boost right there as well. And lastly, I want to hit Zillow really quickly. A housing boom driving that web traffic to that site. Not doing so great intraday, but after earnings, you're definitely seeing those boosts. Flip on the boards, and I really want to hit what Katie just talked about on that semiconductors pain that you saw today. We're going to use NVIDIA as a proxy. That's the biggest weighted stock in the SOX index. You saw that really see some pain here, down 3.3%, and that really flowed into some of the automakers. Katie mentioned the transportation index. Let's look at some of the other automakers here. Electric vehicles that drive ETF. You also have other tech stocks really taking that into stride as well. For example, Amazon, Apple, the biggest heavyweighters in the S&P 500, really dragging it down. Snapchat in the red, even Riot, some of those crypto exposed stocks also in the red. So really the big story here, Emily, is just broad-based selling wherever tech has its hands.
All right. Thanks for giving us a broad roundup there, Kriti Gupta, Katie Greifeld. Appreciate you both. I want to move on now to day 2 in the high-stakes antitrust trial happening between Apple and Epic Games. The cross-examination of Epic CEO Tim Sweeney was aimed at weakening his argument that Apple's App Store is, quote, a walled garden that, quote, traps developers and puts onerous conditions on users. Our very own Mark Gurman has been listening in to every step of this trial. So give us the highlights from the cross-examination, Mark. Did Apple's attorneys succeed in undermining Sweeney's case?
Hi, Emily. Thank you for having me. Indeed, have been tuning in. And yes, I think to some respect, Apple's lawyers did have a successful time sort of undermining the argument of Epic and, of course, their CEO, Tim Sweeney. One of the key arguments that Apple made today was actually getting Sweeney to admit that the 30% cut that Apple gets from the App Store is similar to other consoles, right? And so that raises the question as to why Epic is going after only Apple and suing only Apple over this 30% cut when, every other platform that he provides his software on does take the same cut. Now, the difference I do want to tell you, though, is that while, many of these consoles do take the same cut, if you look at a comparison between, Apple and Google, right, Google takes the same 30% cut. But there is a key difference there, and that's that they have two separate app stores, right? You can have the app store that Google provides built in, Google Play, but you can also add a second or third or even fourth app store from another provider too, which may take a slimmer cut.
So in your view, Mark, has Tim Sweeney and Epic been persuasive in making that case that Apple really is different when, as you mentioned, all of these players take a 30% cut?
Yeah, I think thus far I haven't seen anything from the Epic side to indicate that they are making a persuasive argument to the judge and the court, including in their, in their evidence and their testimonies and the cross-examination that Apple is doing anything not par for the course here. One interesting tidbit I heard this morning was Apple's lawyers basically questioning Sweeney about the typical home and how many devices they have and which devices they have, really going to the crux of the issue. As you remember, Emily, the problem came down to what are called our V-Bucks. V-Bucks is virtual currency that you can buy through the Fortnite game on any device, right? And basically, Epic didn't want to pay that 30% cut for purchasing V-Bucks through Apple, so they created their own payment system. But Apple does allow you to port over V-Bucks that you've already bought on other platforms without giving Apple a commission, since you already bought them, let's say, on Android or PlayStation or whatnot. And so they basically got Sweeney to admit that there's other devices there that you could have bought them on.
All right, Mark, what's on tap for tomorrow?
Tomorrow, you're going to see continued testimony from other expert witnesses. You should see people from Microsoft or NVIDIA testifying on the behalf of Epic, pointing to some of similar concerns with Apple's business model.
All right, Mark Gurman listening in to that trial for us. We're going to have it, every angle of it covered. Bloomberg Tech's Mark Gurman, thanks so much. All right, coming up, a $350 million criminal industry. Ransomware attacks are plaguing major corporations, governments, and healthcare providers around the world. We're going to talk to Palo Alto Networks Senior Vice President Wendy Whitmore next about how the Biden administration should be tackling cyber threats next. This is Bloomberg. A new report by Palo Alto Networks finds that cyber criminals are demanding more money than ever for ransomware attacks, with the highest demand going up to $30 million in 2020. They've also taken advantage of the pandemic to target various organizations, particularly those in healthcare. This as the Justice Department in the U.S. has created its own independent ransomware task force, signaling a growing awareness inside the government of this now decade-old threat. Joining us now to discuss, Palo Alto Networks Senior Vice President Wendy Whitmore. Wendy, thank you so much for joining us. So give us the big picture. How is ransomware and ransomware attacks, how are they evolving and staying ahead of the security giants trying to catch them?
Emily, let me set the stage. So in many cases during the pandemic, technology saved us, right? We relied on it to move to this rapid transformation of a remote workforce. But unfortunately, during that same time, ransomware has truly become an epidemic. Ransomware operators took the time, the extra time that they had on their hands to ultimately refine their business processes and in many cases mature their operations. And so what that's meant is that they have now outsourced so many of their operations to experts, enabling them to be even more effective about the data that they're stealing. And ultimately, it's really at epidemic type proportions at this point for businesses, healthcare, and state and local government.
I want to give an example of a recent attack, this one happening on a company out of Taiwan called Quanta, which supplies components to major companies like Apple, like Samsung, like Microsoft. In this particular case, they're asking for money, and I wonder if they know that they are targeting a company that has customers with pocketbooks this deep. Are they targeting to maximize their profits?
They absolutely are. There is no doubt about it. So as I mentioned, they've matured their operations. And a big part of that is that the actual ransomware operators can now focus on their objectives, which is exactly what you're talking about. Finding the information that I can steal from an environment that is going to give me the biggest return on my investment. So, this is no longer a scattered type of attack. This is very targeted, very specific. And I would say that ransomware operators are often now using the type of discipline that we've largely seen from nation state actors.
So this was by a company called R-Evil. Talk to us then about what you're expecting to see more of from nation states.
Well, I think the real question is how involved today are nation state actors in with ransomware, right? So the reality is that it doesn't necessarily matter today whom the attack is coming from, because the significance of needing to defend your network, of needing to have visibility into the supply chain for all of these types of actors is so critical. So, we used to, as a business, I've been doing these investigations for over 2 decades at this point. We used to focus primarily on nation state actors. And now you have these economically motivated crime groups who are specifically causing even more damages in some cases than the nation state actors are.
So let's talk about where the Biden administration is. This ransomware task force has submitted a report to the administration with 48 different recommendations, ranging from cryptocurrency regulations to requirements for disclosure breaches. Where do you think the Biden administration should begin if, in fact, the government hasn't done enough over the last decade?
Yeah, so Palo Alto Networks is a significant member of the ransomware task force that you mentioned, and we're really focusing on a number of areas, right? Deterring the attacks, disrupting attacker infrastructure, as well as preparing and responding. So I think it's incredibly encouraging to see the government really focused at very senior levels in identifying and recognizing that these threats are a problem to businesses, governments, organizations worldwide, and that it's going to really be a multifaceted approach for us to significantly impact them in a positive way moving forward.
So understanding the threats is one thing, but doing something about it is another. I mean, in your engagements with the administration, have you seen the willingness to put resources and manpower behind these efforts, to the extent that they're really needed?
Right. I think we're at the early stages of really identifying the problem and looking at ways to solve it. So from the administration and government policy standpoint, we're seeing a lot more opportunity to really understand that technology plays such a huge place in ensuring that we're innovating, ensuring that we're able to detect these threats. I think there's more willingness now to look at how do we deter these types of threats as well? How can we disrupt attacker infrastructure and make it more costly for them to conduct these attacks? And then how can we work with other countries to make sure that we don't have safe havens for these types of actors who are continuing to perpetuate these types of attacks? So I am cautiously optimistic about where we are.
All right, fascinating. You could go down a rabbit hole reading about all of these individual attacks. So many interesting threads. Palo Alto Networks Senior Vice President Wendy Whitmore, thank you so much for joining us. All right, coming up, Nextdoor is stepping up its content moderation with new anti-racism notifications. Will it work? CEO Sarah Frier joins us next in an exclusive interview to talk about this new policy against hate and trends on the Neighborhood app that has kept so many communities connected through the pandemic. This is Bloomberg. There's basically no social network that doesn't have to deal with racism and discrimination on their platforms. Neighborhood app Nextdoor is no exception. The company has seen a boom in demand as people have sought community support through the pandemic and at the same time released new policies to combat hate groups among these neighborhoods. CEO Sarah Frier now joins us in an exclusive interview to talk about the growth and this new policy. I want to start with the big picture, Sarah, because our communities have never been more important as they have been over the last year. What trends have you seen on Nextdoor, and trends that may have surprised even you?
Yeah, thank you, Emily. It's great to be here. So Nextdoor, the place you go to plug into the neighborhoods that matter to you. What are the trends we've seen? People have come to us for trusted information. We've worked a lot with different public agencies, US government, UK government. They come to give and get help. I want to say that didn't surprise me, but it surprised me a little how much people leaned into that need to give help. And then finally, now they're coming really to build online connections that take them offline too. We have a sneak peek of a new insights report that's hitting the presses on Monday, but we see things like people have become accidental savers. They're still a bit nervous about what the economy will mean, particularly if they're female or living in a rural area. That said, they've shifted a lot to e-commerce, and they're doing things like food delivery and grocery online delivery, and it doesn't look like that's going to end.
Right. This is part of your Nextdoor Insight series where you are learning more from the incredible content on the platform. People are buying more cars. They want to go to restaurants, but they're also ordering more. Tell us more about what you can learn from the information and how valuable that is.
Yeah, so remember, today Nextdoor is in almost 1 in 3 households in the United States and in 11 countries. And so that gives us access to a huge population to go out and survey to find out what's really happening and how are those trends shifting. And so as we do that, number one, we're tapping into a really unique audience. One of the things I love about Nextdoor is they typically haven't been to maybe other social media networks. 50% have not been to Twitter or Pinterest in the last month. Even 20% haven't been to Facebook. And so that gives us a very interesting angle. And as you noted, things like food delivery apps. So of course we saw a huge surge. Doesn't look like it's going to stop. People have really enjoyed that trend. It's definitely younger population that's doing more of it. But the big jump we see coming is the 35 and above who want to stay on that food delivery trend. Similarly with grocery shopping, people still want to do curbside pickup, so they're not going to retrench back into the store. And in fact, Texas is the state where we see the biggest surge in that, with almost 77% of neighbors saying they want to keep up curbside pickup.
Now, as wonderful as the community building has been, not all neighbors are nice, and there has been a problem with racism and discrimination on the platform. You're announcing this new policy. How confident are you that you can get this problem under control when companies with massive resources like Facebook, like Twitter, haven't been able to do that?
So you're right, it's a problem we take really seriously, and it's gonna always be evolving. There will be no end to it because it is just a fact of how neighborhoods and neighbors interact with one another. That said, we do believe that we can continue to cultivate a much more welcoming platform. We started way back, you'll recall, I think I've talked to you about Kindness Reminder, deeply steeped in social science, and it's all about slowing people down by putting a little pop-up in the app if you're writing something that we think isn't going to cultivate kindness in your neighborhood. We've taken that one step further just in the last few weeks with an anti-racism notification. So if you're posting phrases like all lives matter or blue lives matter as a retort to someone saying Black lives matter, we're helping educate why those can be very hurtful and are not at all welcoming, particularly to our Black neighbors. And then just today, we've taken the step on banning a lot of hate speech and hate symbols on the platform because we want to stay out in front of this. And we certainly hope that other platforms will follow because we think this is how we build much stronger, more welcoming communities over time.
The anti-racism notification rolled out a couple of weeks ago, as I understand it. Are you seeing an actual reduction in use of racist language as a result?
We do know for sure that we have an impact when we roll these things out. Kindness Reminder saw about a 30% reduction or actually change in the post itself, because often people don't even realize that they're airing into something that comes across as offensive, comes across as hurtful. And just that quick reminder is enough to have people change what they're writing. And for sure, what we do know is that a lot of the neighbors, the Black neighbors on our platform, for example, when they see us take a stand in the product itself, that's what really makes a difference and really starts to help lay down the groundwork that this is a platform that welcomes everyone.
Facebook has been testing its own neighborhood product. Does that concern you, especially coming out of a pandemic when maybe we won't need our Nextdoor app as much as we did when we were stuck at home and just needed that outdoor engagement?
Yeah, no, I think local's never been more important. And in fact, many of the trends help the platform. Think about those people who would have been leaving home to go work maybe in a city for 5 days a week. And now they're doing some sort of hybrid of work from home alongside shifting to a different neighborhood. So in that regard, Nextdoor continues to stay very front of mind. I think we've also just become a daily habit for people, recognizing that there's huge utility, whether it's that near-term need, like help me find a plumber, help me find a great babysitter, or wanting to keep building on community. I think everyone recognized during the pandemic this power of local. And I think Nextdoor is really set up to be the only platform that can do this, right? Our graph is a local graph. It's not a friends and family graph or a professional graph. And so we are the place that people turn to when they care about the local perspective or when they want to find out what's just happening around them.
You were the CFO of Square for many years, so we know you know how to turn a company into a massive moneymaker. Can you give us an update on how much revenue the business is generating and your plans to get closer to potentially an IPO?
Sure. So for sure, the last couple of years have been very good to Nextdoor in terms of our overall growth rate. In 2020, our DAU, our daily active users, grew over 50%. And that's our North Star metric, because that's both how many new people are coming to the platform, but are they finding us to be that daily habit? With that, of course, revenue continues to build because we become much more useful for advertisers. I talked earlier about how unique the platform is. And so more and more advertisers are finding Nextdoor as the place to get their message out. And of course, we also work extremely well for small businesses. So not just the big local businesses like a Walmart or a Home Depot, but also the mom and pop on the street corner, maybe the local coffee shop, the local Pilates class. So revenue has tracked with that DAU number, and we really like the momentum we're seeing overall in the business right now.
Is an IPO in the cards, Sarah?
Well, could we raise money and put it to good use? Absolutely. Are we ready to be a public company? We're working on that, and I think we're there. I know what it takes to run the gauntlet, particularly that first year. The how we do it remains to be seen. I don't want to really get too caught up there because ultimately it's about, can we be a great public company?
Nextdoor CEO, Sarah Friar, thank you so much for joining us. Always good to have you here. Appreciate it. Coming up, a turn, LSD and cargo shorts, the fascinating story about the rise and fall of tech entrepreneur Justin Zhu, and whether it reveals deeper problems plaguing Silicon Valley. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Chip makers getting our attention today, looking at tech more broadly. I want to bring in Bloomberg's Kriti Gupta. Kriti, what are you watching?
Well, Emily, we've seen such as outperformance from chips. We know there's a global chip shortage that's really been helping the stock. Until last month, you really saw this major underperformance from the stocks index compared to the S&P 500, which has largely been trading sideways, really accelerating that drop in the last 4 trading sessions. You can see that on the right side of this chart, really speaking to that pain in not just big tech, but once again, chips just really translating into that stock story. Flip up the boards, and I want to show you that this is largely a function of that earnings story. Remember those strong beats last week? Looks like that's really where the selling began. You can really see it's a broad-based tech sell-off, and as you see, chip makers are down 2%, the average one-day post-reaction, compared to some of the other tech sub-indexes, which just haven't been reacting that bad. So this is really an arena to watch to see if that underperformance continues, or perhaps if that continued demand maybe pushes those stocks higher, Emily.
All right, Kriti, thanks so much for that quick roundup. Now, to tech entrepreneur Justin Zhu, who co-founded the now $2 billion digital marketing company Iterable until last month when he was fired as CEO. He says it's because he admitted to taking LSD before a big investor presentation, but that's not the whole truth. The story was recently profiled by my colleagues at Bloomberg Businessweek, and Justin Ju joins us now from San Francisco with his side of the story. So Justin, I just want to take a step back. You say you were fired and it happened abruptly because you shared with one of my Bloomberg colleagues that you had taken LSD before a board meeting back in 2019. From your perspective, what happened?
Yeah, the story was never been about taking a substance in 2019 for focus. It was really about speaking up and sharing my journey as an Asian American founder and CEO. And it was supposed to be a story about positive story, overcoming obstacles and raising very healthy valuation as a $2 billion company. But instead, it became a story about the price you have to pay to stand up, speak up as an Asian American and stand for justice.
So you make the allegation in the story that this might have something to do with your race. And that is a strong allegation. Your backers, including Index and CRV, have backed a number of companies with Asian founders, and they declined to comment for this particular story. But what evidence do you have that there was discrimination at play?
Yeah, the fact is my performance as a CEO, my performance as a leader is the highest you can see. The feedback I've gotten is not about my performance, but the style, the values I hold, looking for consensus and not being conflict, choosing conflict first. And really it's about the values I have as an Asian American, the Eastern values I have, and it's really discriminating who I am versus actually looking at objectively the performance of me as a CEO.
Talk to us a little bit more about your relationship with your investors. Did you feel like it was strained?
I did, and it's been over a year. I just felt there was a lot of criticism about how I did things and didn't really quite understand why, because all of the metrics, performance was really good. And so as I got down to it, we had a meeting in the park last June where the investor called me out of the blue. And it was about, it sounds like you're pattern matching on the profile of a CEO that goes public. We're on track to be public. There are very few people who look like me, Asian American enterprise software company CEO. And so really you're thinking about protecting your investment versus actually about doing what's best for the long term of the company.
Now, I know you believe this is much bigger than the LSD incident itself, but that incident, to be fair, is getting a lot of attention. Many people out there don't understand why you would take LSD before a meeting or why your investors should tolerate it. Why should they tolerate it? Why do you think the action they took was unfair? Yeah,
so the root of the LSD experience was to heal trauma and stress associated with this role. Part of sharing this experience is also, especially in Asian communities, we are told to eat the suffering, where we don't talk about our suffering. And for me, I was at a point where I needed to heal in order to protect the company and raise a Series D. And so that was out of the need to do so. It's something also I've learned from other entrepreneurs, from Michael Pollan's book around these healing substances. And as you show in the article, something that Steve Jobs, Bill Gates, many others who've taken. And so that's what inspired me to take it. And since then, it has changed my life. Our company has 4x in valuation, and the culture is thriving. And so by all respects, we're doing so well after that healing of the trauma I had.
Now, it's no secret that microdosing has become a trend. It's been, written about on tech blogs. There are tech CEOs and founders out there who talk about doing this regularly. And I wonder, is it something that you support? Was that a one-time thing? Or do you think that this is a problem in the industry more broadly?
Yeah, it's something I did one time in 2019. I would prefer to have access to a therapist that really understood this medicine. It was very difficult to find, and it was only through reading books I understood. And so really, for me, the way I did it, I definitely don't recommend it. But it was something I had to do to make sure that the company is in a good place. I'm certainly not an expert on LSD. I think there's a lot of good research being done there. But from my experience, it has changed my life. It has changed my relationships with my mom, with our employees, and just with how I process emotions and the difficulties I faced as an Asian American and also as a founder and CEO.
I understand and empathize with the struggle and perhaps the lonely journey of starting a company and scaling a company, which I'm sure is incredibly challenging. One of the things you talk about in the article is you talk about how investors early on are looking for quote unquote weird, I believe is the term you use, when they're looking for people to fund early on. But then as years passed, the desire for what they want in a leader changes. Can you explain that to me?
Yeah, so the conflict I had was with my Series A and Series B investors who invested 5 or 6 years ago. And so they're typical VC funds, 7 to 8 years. And so they're nearing the end of their fund. And so they're looking to sell the company or have his IPO and move on. Whereas I'm trying to build a company for the next 20, 30 years. And this company is my life's work. I put my heart and soul and everything I have into the company. To this day, I have not sold one share. And so really you can start seeing a conflict in terms of the time horizons. And so, and I think some of the strain also came from that.
So when you look back on the decisions that you made over the years, and maybe, if it was indeed just that one time, do you have any regret about how you handled the situation, whether it was just that situation or other situations?
I think certainly there's things I can improve on, and I'm very open to feedback. I think if I had to do it over again, I would have talked to more people sooner about the stresses and traumas I've had, sought help earlier. I really try to take everything on my own shoulders. And so I hope my story can inspire others to seek help earlier, to talk to people, and not have a situation that's happened to me, which is very unfortunate.
Your co-founder has been appointed CEO at this time. Do you think your investors made a mistake? Do you think the company can keep growing as fast as it did without you at the helm?
So my co-founder and I, we've known each other for almost 10 years. I'm one of his best friends. I'm supposed to be at his wedding in a couple of months as his groomsman. So the way this happened is just so traumatic for all of us. Andrew, since the beginning, he loves working on product. He's an engineer and innovator there, but he is not a manager. This is the first time he's managing anyone. So you went from someone who's an engineer to now managing 420 people of a $2 billion company. So I certainly don't think it's the right thing, let alone having my co-founder be in that position and given our relationship.
So, I would assume that your investors and you and your co-founder probably want the same thing, which is a strong company that's growing fast with focused leadership. Do you think there's something that, whether it's your investors or that the community could have provided to have made that happen or to help other founders out there?
I think it's providing space for founders, asking the founders, the CEOs, how are you doing? How are you really doing? And providing more mental health support and really understanding where they're coming from. 3 weeks ago, I disclosed for the first time to my investors the experience I went through, the LSD experience, hoping they would understand that this was solely for helping the company to raise their funding in 2019. And this is really from the perspective of, hey, this is my life's work and the people, hundreds of people that I want to protect. And so I really think making space and empathy for that going forward would be very helpful for the community.
So what are we going to see you do next?
I'm just recovering from all of this. I'm trying to talk to as many people as possible. Probably take a little bit of time off just to reflect. It's been 8+ years building Iterable. I have much love for the people there. I miss them all. If you hear me, iterators, I miss you all. Thank you for everything you do. I'm just trying to process this all. It's honestly very traumatic, and it's really quite an experience so far. So it's really just time to reflect.
Are you going to be going to the wedding, your co-founder's wedding?
I'm going to the wedding, yes. Andrew, I still love you. You're still my brother. You're still my brother.
All right. Justin Ju, fascinating story, and you can check out more of that story in Bloomberg Business Week by my colleague Sarah McBride, founder and CEO there of Iterable. All right, coming up, a new piece of technology helping one self-driving startup go the distance. We're going to talk to the CEO about the new LiDAR system giving his company the edge. This is Bloomberg. Argo AI, the self-driving startup backed by Ford and Volkswagen, has a new secret weapon in the race to deploy self-driving cars. Bloomberg's Ed Ledlow spoke to CEO Brian Selesky about Argo's new long-range LiDAR and its plans to raise money this year. He's the latest guest on our City Lab segment.
It's tailor-made for fully autonomous driving. That's driving that doesn't require any supervision by a human. It really offers really photorealistic imagery all around the car. It can see at lengths up to and beyond 400 meters. It's a really, really compelling sensor, and it's going to allow us to operate safely on all types of roads.
Is this a technology just for your future autonomous cars, or is it a technology that you'd consider packaging and selling to others?
Well, we might sell it someday, and we certainly are going to look at selling it in a bunch of verticals that are adjacent to automotive. But for us, we think it's a real competitive advantage for our autonomous vehicle. And so, we'll be looking at those opportunities seriously. But right now, we think it's a huge competitive advantage for us.
You test in a lot of US cities and jurisdictions, but you've also expanded your operations to Germany. Tell me about that.
Yeah, so we're testing in 6 cities in the US today. We think we have the largest AV test footprint out of any of the other autonomous vehicle companies. And then we're also expanding to Europe. So with our Volkswagen investment, we have an engineering office in Munich, and we're going to start scaling out some operations across some cities in Europe in the coming years. We also just invested in a sizable test track at the Munich airport, which is something we're really excited about.
Do you think that you deploy commercially in the United States first or in Europe first?
We think that the US will probably lead. The regulatory environment is set up in a number of states to allow commercial deployment of autonomous vehicles. But we also think that Europe is a great market, and we're definitely interested in seeing how that develops.
Are you seeing any meaningful progress in Europe on the regulation side?
We do, and we think that cities really are understanding the benefits that autonomous vehicles provide, whether it be to better manage congestion, do smarter route planning throughout a city to alleviate congestion, the safety benefits, the ease and access and democratization of mobility, personal mobility to people who don't have it today. There's a ton of benefits, Ed, and I think that cities are waking up to that.
You talked about the big names that have invested in Argo AI, Volkswagen and Ford. It's a capital-intensive exercise bringing autonomous vehicles to market. What are your financing plans? What are your views on going public?
Yeah, so we'll be raising money this summer. We're really excited about doing that. We'll be taking money from some of the capital markets, and we'll be looking at an IPO in the future as well. I think that it's one of those things where we don't know the exact source that we're going to take the funding from next. We're looking at a bunch of options, but we're really excited about how that's going to keep us going for the future to really be able to scale out autonomous vehicles.
What about SPACs? There's been a lot of energy around SPACs recently, particularly with a focus on the automotive and automotive technology sectors. Is that an option for you?
Could be. I think SPACs are interesting. There's a lot of different takes on it. I mean, it's not a new instrument by any stretch, right? But it really is democratizing early stage investment to an everyday investor. And I think SPACs are a really useful route that a lot of companies can take in order to take advantage of the public markets and the capital available there. And it's certainly allowing an investor access to really transformative companies, like hopefully Argo someday, and others, where those means may not have been available in the past. I think the key, though, is that with a SPAC, it is important that folks are upfront about realistic projections when they go out and when they speak to the market. I think it's important those investors also understand what they're getting into.
Argo AI CEO Brian Selesky speaking exclusively with our Ed Ledlow. You can catch more of that interview at Bloomberg.com. Coming up, is Dogecoin gaining as Elon Musk prepares for his SNL debut, or is there more to the cryptocurrency than meets the eye? We'll discuss the 40% pop next. This is Bloomberg.
I think folks, when they first come into the space, as they start to see these other things, I think it's actually a feature, not a bug, that these different assets or NFTs or whatever, they create momentum in the space. And I think that's healthy to kind of bring the space to new levels. And so I think it's a great thing overall.
That was Coinbase COO Emily Choi talking about the evolution of cryptocurrency and new investment options presented by assets like Bitcoin, Dogecoin, and NFTs. She spoke earlier at the Bloomberg Wealth Summit. The price of Dogecoin soared around 50% Tuesday. Recent Dogecoin, Bitcoin, and Ether rallies continuing a trend that's seen the value of all digital tokens surge past $2.2 trillion. Spencer Bogart of Blockchain Capital joins us now to discuss. So I have to start with the Doge. Spencer, why is this rise? Does this have to do with Elon Musk coming up on SNL, or is this something else?
Look, it's anybody's guess what's driving the specific price action. I think that that's the primary culprit here. Look, I mean, it's a meme coin. There's no, it is a functional network, so we'll give it that credit that it does work. There's just no real users. There's no developers building on it. I mean, I've never taken an investment pitch of someone actually building on top of Doge. So, I look at this as very analogous to the GameStop saga, except with the caveat that GameStop had a little bit more going on to it.
So why does Elon Musk love Doge so much then?
He likes jokes. He's a fun guy, and he likes memes, and Doge is the perfect target for it. In the current market environment, I'm not surprised that it's caught in the eye of more than one market participant.
Okay, so let's talk about these other rallies, and how do you separate out what's happening with Doge versus everything else?
Yeah, fundamentals would be the easiest way to do it. So, again, if we think of Doge as GameStop, then, we could think of something like Ethereum or ETH, the asset, as closer to, an Amazon of crypto finance or digital finance broadly. And so, whereas Ethereum's seen a ton of fundamental traction and adoption and a lot of developers building on it, Doge just doesn't quite have that. So, I think that's kind of where we separate the wheat from the chaff here is who's actually getting developer and user adoption. And Ethereum is certainly atop of the stack there.
So talk about Ethereum and what's happening there. Obviously, we're seeing a massive rally. And again, when this happens, so many folks just don't understand why. So what's driving it?
Yeah, sure. So Ethereum has had, obviously a fantastic run recently. I think there are a few near-term price catalysts that people are watching. So there's a few improvements to the protocol, like EIP 1559, that just kind of it improves the user experience in terms of transaction fees. It also has a net effect of burning some of the ETH supply. So in theory, putting some upward pressure on price. That's one upcoming catalyst. There's also the rollout of a lot of the Ethereum scaling solutions, which has been much anticipated for a few years now. So those are finally on the horizon and hitting real world deployment. And then we've got the transition to ETH 2.0 that's on the horizon as well. So those are all kind of on people's minds. But I think that really, again, tying it back to fundamentals, really the story for Ethereum is all around DeFi. I mean, this is the primary driver of growth and adoption within the Ethereum ecosystem. And so DeFi is, of course, decentralized finance. These are digitally native financial applications that are built on top of Ethereum that are seeing incredible traction over the past 1-2 years.
So either way, we've seen a lot of volatility. Are we going to see that volatility continue when perhaps, one might think, especially after the Coinbase listing, that maybe we would start to see some more stability?
Yeah, listen, I mean, I think that all of these assets, right? We were having this conversation a couple of years about Bitcoin of when would it become less volatile. It is still volatile today. It's less volatile than it once was. Ethereum is at relatively early stages of approaching gigantic markets. I mean, global financial markets around the world, this is some of the biggest opportunity it could possibly be going after. It's showing incredible traction towards that objective. I think that we should expect to continue to see volatility going forward. You know, the longer of a track record it establishes in terms of building developer and user traction, the more we can expect that volatility to decline. But I don't think that that's going to happen over the next 12 or 18 months or anything like that.
All right, Spencer Bogart, Blockchain Capital, thank you so much for joining us. So much to discuss and much more to talk about in the crypto space. Tomorrow, we're going to be speaking with Mike Novogratz of Galaxy Investment Partners. Also tomorrow, we'll be speaking with Lyft President John Zimmer, a day after the company reports results. Lyft reporting losses narrower than estimates, a sign that riders are starting to return. Revenue declined 36% to $609 million from a year earlier, but it was up 7% from the previous quarter. Shares rising after hours. Again, Lyft President John Zimmer tomorrow. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Have a great evening. This is Bloomberg.